Hello everyone, this is Dan Hussey with RJO Futures bringing you our Strategy of the Week update for the Japanese yen. We have a March 2017 4-hour candlestick chart up here for you, and we're going to take a look at how the trend has been progressing over the last couple weeks, and then how it progressed into our last update, and then of course where we've gone from there. So into our last update, we were looking at a Fibonacci confluence zone created by an extended low. So this is our extended short here. This is a traditional fib. We use a Fibonacci retracement tool drawn from a low, in this case the November 24th lows at the 88.27 half level. That low drawn to the December 15 lows at the 84.60 area gives us the current full 50% retracement and resistance zone into the 86.40 area. The 86.40s coupled with what was then also a equalex measurement, and this was drawn from, again, the 84.60 low to the highs on December 19th. Using a Fibonacci extension tool now, we can actually see that the 100% extension of that first leg off this low, if we were to extend that same distance from the secondary low here at the 84.90 area, we find that 100% or that equidistance comes in at the 84.60s as well, or I'm sorry, 86.40 area as well. So the confluence, or both of those Fibonacci retracement, the Fibonacci measurement areas, I should say, coming together at one location gives us a higher probability that there is in fact resistance, orders clustered there, and a reason for the market to actually stop and potentially turn over. And sure enough, that's been the reaction here so far today. So we finally did trade up into that area today. We were able to see a reaction off the 86.40 resistance, and technically speaking, the market got a reaction back towards our first targets. That's what these blue lines are. That's a technical first target. It's the first confirmation that a turn could be occurring and that there could be a completed corrective structure at this time. And in this case, if you're an Elliott waiver, this is a nice, kind of ABC or 1, 2, 3, a corrective three-wave structure into resistance. Simple as that. And the real question is now, okay, well, what now? How do we go forward from here? How does the market develop? And what can we potentially look for, into the new year? Well, because we got this initial reaction off of resistance back towards those technical first targets, it's pretty safe to assume that the bears might start taking over here and be in control. So now it's going to be a game of testing support areas, and of course we have trendline support here coming off the lows that can come into the 85.50 area. You should always draw up a Fibonacci retracement, right? Look for that 50% area, inflection zone also coming in at the 85.50 area. So at this point in time, there's a pretty good possibility and a higher probability that the market will test down into those levels and into that area at this time. Now, we go below those levels. Now we're talking about heading down into new lows and a test of prior lows into the 84.60s. Of course, the technical downside target for this this type of setup is towards a negative 23.6% and a negative 61.8 line for the 50% and 100% lines respectively. For more information on how to kind of trade those trends, feel free to reach out to me, or how to identify these levels, feel free to reach out to me at any time. I'm happy to go over that with traders and discuss this methodology because it is a great trend following methodology in more detail. So again, three-wave corrective structure into resistance having traded, could see downside towards technical targets towards the 83.90s. Now, let's not discount the fact that this market could still go up. And if it does go up from here, as long as we remain below that 87 100 handle, or really kind of towards the 86.90, 86.85 area. As long as we remain below that area, we are going to have a downside bias here, looking for potentially new lows. But if we do go above, that could lead towards a much larger correction higher, a larger structure playing out, and at that point in time, we'd be kind of reassessing what we'd be looking for, for an outcome for this market. So with that being said, I'm Dan Hussey with RJO Futures, and I'll be back with you as price action develops. Take care, everyone.